Okay guys, welcome back to the YouTube channel. So today we're going to be talking about the recent inflation report, the CPI report. It came out hot. So let's talk about the market reaction, what this means and, how we can capitalize on this data. So yeah, the first thing I want to say before I get into that is I will now be posting back regularly on this channel, market updates, educational videos. So stay tuned for more videos on here. But anyways, let's get into it. So if we come here, we're on Forex Factory, and I'm just going to put in the US here. All right, current day. So basically, this is a CPI report right over here. Now you can see the main figure, CPI year over year, we had a rise, right? We hit 3.5% on the CPI year over year. That's above the forecast and above the previous reading, right? So we've got hot inflation. Now, if we look at the historical chart, you'll see that what we had, if we just do a little quick recap, we had inflation start to soar really aggressively, right? And it peaked at about 9%. So that's extremely high inflation, almost out of control. So what did the Fed do? Emergency measures. They put interest rates as high, as quick as possible, right? So they started to raise rates super aggressively. And that brought the inflation down. However, in these past roughly 8 months, 9 months here, you can see that inflation has been stuck at about 3.2%. And recently, we began to see this little tick up in inflation, and now we're at 3.5%. So the recent months have actually seen a tick up. Now, why is this so important? Why is this so impactful? Well, this is so impactful because the Fed, their goal is to keep inflation at 2%. However, we're currently seeing a rise in inflation, at least in terms of CPI. So that means their target has not yet been hit. That means the fight against inflation is not yet over for the Fed. And that's despite interest rates being at 5.5%, right? So what this means is the Fed is likely going to have to keep interest rates higher for longer to continue to combat inflation. Now, where we can start to get trades from this is when we start to see this economic divergence between the US and other economies, right? So this is how we start to set up trades. Now, if we compare this to the to the euro, you will see, let's just put in the Eurozone here. You will see that inflation in the Eurozone, right here, CPI flash estimate year over year, it's at 2.4%, right? That's very close to the target. So basically, we've got this economic divergence where the US has a pretty robust, strong economy, continuing to stay pretty strong with strong data, such as the previous NFP data coming out strong. They've got inflation remaining sticky. And then you've got the Eurozone with weak economic data and inflation coming down to target. So the Eurozone is going to be the one to cut rates sooner than the US, who need to keep their rates elevated in order to combat that inflation. And a good tool I'm just going to quickly show you here is the CME Fed Watch tool. Now, if you haven't used this, I highly recommend it. It's just a good tool to see how what market participants are expecting in terms of interest rates for the US, right? So you can see here, basically says, what's the likelihood that the Fed will change the rates, blah, blah, blah. And it's according to interest rate traders, right? So as you can see here, so this is for the upcoming June meeting, right? If we go to May, you'll see that basically everybody expects them to keep rates as expected. So this is as expected. This is a drop. If you go to June, you will see that everybody is expecting, or 83% are expecting them to keep rates the same. But interestingly, before the CPI report yesterday, this was actually at 50%, right? So it was this was at 50%. So I think it was 50-50 basically. Basically 50% of traders thought they were going to drop rates. And suddenly one CPI report has shifted that. So you can see how quickly things can change and money flows will quickly shift to this new data. So this new data point is basically meant that the expectation is that they're now going to have to keep rates higher for longer. And this is where the trade opportunities start to come in. Now, I've been anticipating this. Why? Well, I've been anticipating this because if we look at the US data, you'll see that the economic data from the US has continued to come out strong, right? If we take a look at, NFP, for example, and various other metrics, ISM manufacturing, PMI, etc., continuous strong data and strong economy means that it's very hard to bring inflation down. So I was not expecting the US to see significant drops in inflation. Hence why I have been anticipating this divergence for quite some time. Whereas you look at the Eurozone, the economy is not in great shape and inflation is clearly trending down. Hence why I've been in Euro USD since up here. I took trades here, somewhere in there, and more recently, a trade that I called was up in here, and I got in that trade, and obviously right now it's paying dividends. But even if you didn't get in there, I still think trade opportunities will likely arise. Now, if we saw this drop, if we see a retest of this zone, I see there's no reason why we cannot continue down. If we don't get that, I even think a breakout here, retest, and continuation is also a plausible trade. Now, obviously, we've got to see how other continuously monitor the data, but these trades I think are highly plausible. And just want to quickly go to the US dollar. You can see the market reaction of the US dollar, right? Higher rates means increased demand for the US dollar, inflows into the US dollar. So yeah, basically that's it, right? That's how I interpret it. That's how I think the market is going to continue to trend. Hot inflation means rates higher for longer in the US. A lot of other economies where they're going to have to start cutting rates means that the US dollar is going to remain dominant over its peers, right? And I'm going to continue to capitalize this. This is an idea that I've been talking about now for months, right? And it's continued to pay off for me. So yeah, I'm just expecting that trend to continue until the economic data shifts. So anyway, I hope you find this video useful. I hope you can, you've gained insight into what exactly the CPI report means, and how you can capitalize it. So until next time, cheerio.